Okay, good afternoon, everyone. Thank you so much for taking the time, as I say every single week on these live training webinars. The goal is to make sure you walk away with nuggets. I want to make sure you're writing down notes, comments. We want to hear from you, okay? Questions. Anything that we're going over today as far as the Levinson platform or Mutual of Omaha, we are here to help you. As one of their top IMOs, okay, we have access to everything. So once you are appointed, you're active with Levinson and Mutual of Omaha, you have our entire team of 27, okay, in 3 different states now to help, and you'll have the MOO home office, back office support as well, okay? Plus, we have a bunch of great platforms that are exclusive to Levinson that we pay for every month that you have access to, okay, especially to combine with certain MOO products that are approved in these platforms. So we're going to touch on a lot of great stuff. A lot of this you have not seen before. So that's why, again, I want to make sure you're taking notes or using that little Q&A question panel, which is part of the GoToWebinar software. What we're going to do, if we have time, we'll open it up for questions at the end, but I do want to get everyone out before 3 p.m. Eastern time. But if you have questions, again, just type away and we will answer them in real time, or we'll call you as soon as we hang up. Okay, it's very important. We're going to have our webinar giveaway at the end. So make sure you're on until the end. You're paying attention because I'm going to ask a question that has to do with the presentation, with the slides, and whoever answers first and correctly wins the new Fire HD tablet and 2 prospecting books on us. We'll announce your name at the end. So make sure you're on right before 3 p.m. is when I'm going to do this. And then hopefully we'll get you out by 3 on the dot. Okay, so what I want to do is we're going to talk about some of the updates here at Levinson. I'm going to run for about 7 to 8 minutes and then turn it over to our VP and internal from Mutual of Omaha, who's joining us today live. So let's go to the first slide here, if we can jump right in. I'm going to switch gears for a second, and I know a lot of you are watching this live, and most of you, we have thousands and thousands of agents all over the U.S., are going to watch this in 2 weeks when we send it out to our database, which is fine, but the Super Bowl contest will obviously be irrelevant to those of you that are not here with us live today. But I do want to mention you are here with us right now, and you're listening to us, so I want to make sure you take advantage and walk away a winner. It's very simple, okay? For Levinson active agents, if you wrote an application this week, okay, and even if you have not written the application yet, you still have until Sunday, until this Sunday, right before the game starts. I believe it's 5 p.m. is the cutoff. So you have to submit an application, and as soon as you do, okay, unless you already did this week, like I said, go on our Facebook page, our Levinson Facebook page. You got to share the winner and the total score, okay? And whoever is closest or whoever picks the exact winner and the exact score walks away with $1,000 cash and a beachfront suite at our Hilton Resort, where we're going to have the expo April 11th. Okay, so that's almost $2,000 within itself. So we'll announce the winner on our Facebook page, but again, just all it takes is 1 application to write. Okay, and even if you wrote it already, no problem. But make sure to go to our Facebook page. You got to comment, tell us who's the winner, total score, done. You are in, and hopefully you walk away a big winner. Okay, let's keep moving forward. What I want to do next is just kind of shift gears for a second. Yes, we have our timeline. That's what you're looking at. But what we do every year, typically the end of January, early February, is we get all of the results from NALBA and LIMRA, okay, which is made up of independent brokerage agencies in our country, okay, all of the IMOs who work direct with carriers just like we do, okay? So there's some interesting takeaways that I want to point out quickly. I just got the results in. I figured I would share live on this webinar because it has to do with all independent agents. So number one, just a few interesting bullets that I wanted to share was on the average independent agents are working with 1, 2, or 3 IMOs. Okay, and I think that's important. Obviously, we hope you're writing most of your business with us, if not all of it, but you're not captive to us in any way, and we get that. But one of the takeaways I just want to point out is and it's like I said, it's okay if you're working with another IMO or agency. There's 3 questions that you should be asking these IMOs or MGAs. Call it whatever you want. Okay, and these 3 questions, real fast, and we'll put this in the thank you email as well. Number 1, is the compensation direct from the carrier? Okay, because you never want to rely on an agency to pay your compensation. Typically, that means you're not agent of record. Okay, so get that question answered. And then when you're done asking these 3 questions, get it in writing is my advice. So direct compensation, agent of record. Number 2, releases. Will they release you if there's no chargeback or chance of a debit or lapse or whatever you want to call it? Okay, if you're free to go, okay, meaning there's no risk for that upline, will they give you a release? Get it in writing. Number 3 is whoever you are working with, okay? And if it's Levinson, you know the answer, but if not, you got to ask this question. Number 3, you are obviously a wholesaler, meaning the agency. Are you selling in any way whatsoever on a retail level? Okay? And if they say, yes, we are, that's a huge red flag. In fact, any of those 3 questions, if they're answered no, okay, huge red flag, run the other way. If it's here, great. If it's another IMO that's reputable and they can answer these questions, yes, no problem, you're good to go. Okay, but here's why the retail wholesale thing, real fast, and I know I'm kind of getting off topic here, but it's important. In fact, it's most important because I hear all these horror stories where agents are stuck. So the retail wholesale side, and this is why it's so important. If the agency, you call it a mentor, coach, GA, whatever, if they're also selling, okay, and you're selling, you're all fishing in the same bucket. Okay, that's a huge conflict of interest. In my opinion, it should be illegal. If you're retail, stay retail. If you're a wholesaler, IMO, that's all you should be doing is supporting your agent. Your agent is the customer, not the customer on the street. That's your job, meaning the agent. Okay, and think of it like this in a nutshell. Think of, I'm into cars and I have to draw these analogies all the time. Think of Ford, right? Ford Motor Company. Okay, they're the big distributor, manufacturer, call it whatever you want. Just under Ford, they have dealerships all over the country. Okay, and then the dealerships market to the consumer. Okay, so the way I look at this is Levinson is Ford, the dealership is the agent, and the consumer is your customer. Okay, so can you imagine if Ford said, you know what, moving forward in 2025, we're going to start marketing, yes, to all of our dealerships, of course, but we're also going to go direct to the consumer. What are the dealerships going to say and think and do? They're going to say, oh my gosh, wait a minute. If you're that consumer at the end of the hill here, okay, the end of the line, you're the consumer, would you rather work with a Ford dealership in Polk County, or would you rather work directly with Ford, the big manufacturer? Of course you're going to work with Ford, because mentally you're going to say, oh my gosh, I'm going to get better service. Pricing is going to be the best because there's no middleman. So huge red flag. Okay, now you understand retail, wholesale. There is a fine line, huge difference. Don't let the two cross over. I'm hearing this more and more. Okay, I have just a couple other things and then I'll move forward because I want to make sure that we have our feature presentation, which is going to run for about 40 minutes today. This is another great point here. Most common reason for agents to be associated with an IMO is to make sure that they remain competitive, followed by better compensation. Okay, and that this was based on the survey feedback, and that's kind of in line with what I just spoke about. This is another big one. Year-over-year sales growth expectations remain strong, with 52% of IMOs expecting an average of 21% growth year over year. Okay, that's a big deal. That means we're in the right industry. A couple other things. IMOs are seeing the most growth from CFPs, okay, certified financial planners, and listen to this, this is a big one, and P&C agencies. Okay, so that tells me as a life insurance agent, if I have my hat on, I need to partner up with P&C agencies. Why? We know what's going on with homeowners policies being discontinued, prices through the roof. P&C agencies are trying to supplement their income, so this makes complete sense. It means you need to work with P&C agencies. Why? Because you can market to all of their consumers and then work out a referral arrangement, or hopefully they're licensed. But that's up to you. But that's a big deal. Let's moving forward here. I want to pick out a couple other things. On average, they consider an active producer someone who sells between 11 and 24 policies per year and a minimum premium of 178,000 a year. That number just went up, which is good to see. On average, 75% of all producers are age 45 and up. Okay, that should tell you if you're working with agents, where, and how to focus. And then this was an interesting statistic. 78% of all independent agents are male, 22% female. Okay, so if you're a GA looking to build a practice, okay, you know where to aim your marketing skills and campaigns. Okay, that number should be 50-50, if not the other way around. Okay, it should be closer to even, in my opinion. So great opportunity there. And then last here, I have a few others, but I know we're running out of time. Last top 2 reasons for placing business with a carrier is product pricing and faster, easier underwriting. And that leads me to why we have Mutual of Omaha on today, because they nail both of those things. Okay, and you're going to hear why in just a few more minutes. Okay, timeline. Let's, if we can back up just for 1 second, and then we'll jump into testimonials. I want to do this for a reason, and you'll see why in just a second. Timeline. Me and Carrie, okay, top left-hand corner. That was before I was born, but it's a cute picture of us. 1972, Carrie started the company, okay, and I was born just after that. And in 98, I joined the company. 03, we came out with the first brokerage website with a interactive quoting engine. And then I'm not going to bore you with all the details. We were the first IMO to partner up with a company called Applify to roll out the first electronic application, and then electronic policy delivery with a company called iPipeline. We were the pilot group to roll that out initially. Very proud of that. And then the first IMO to have a podcast, Gary Vaynerchuk, with the first guest speaker. In fact, this was his idea. He talked me into it. Gary V is a huge social media influence. But anyway, the rest is history. Here we are today, over 24,000 agents in just about every city, with Insure Me Now Direct being the only multi-carrier, multi-product, direct-to-consumer platform where the agent gets full compensation, agent of record, max limit of $4 million, no exam, instant decision. So that's a huge deal. Let's keep moving. Testimonials. That's all about you. Our customer is the agent. Again, we don't sell on a retail level. We don't have a call center in the back room. We are 100% wholesale. We're focused on you, our agent. So I want you to leave a review on our Google page, on our Facebook page. I send you a prospecting book on us. Once you do, these are some of the 5-star reviews. I won't go through all of these, but I will say this means everything to us and our entire staff. Okay, this moves the needle internally. When we see things like this, we typically do a luncheon. We'll send it throughout the office to all of our employees, in-house and remote, and it literally makes our day and weekend. So please jump in, share these things. Let's keep moving forward. The Expo, I hope you RSVP'd by now. Here's why. Number one, we're capped at 300 per the fire code. This is a Hilton resort right on the sand, right on the ocean in South Florida. They just renovated the entire hotel. And like I said, you or in fact, if you focus on the left-hand side, that's our qualification. That's all life and annuities combined. Okay, so if you're focused on just life, no problem. Either or, no problem. But make sure to get these apps in and placed by March 1st, so you do not have much time. Now, here's what I love. Let's move over to the right-hand side. We have Charles Samuel, one of my favorite annuity sales coaches ever in history. The guy is a beast. You will love him. Mary Reed, unbelievable when it comes to wealth planning, retirement planning, tax saving strategies. Okay, and if we go back to my survey, okay, you saw what they said. One of the bullets was financial planning is going to be where the IMOs and agencies are focused on for growth in 25. Between that and PNC agencies, like I shared, Mary Reed is a best-selling author. She wrote 3 books on these strategies. She's going to share for an hour at the expo live. I promise you. Okay, you're going to walk away with nuggets. And her average case size, these are whales, guys and girls, average case size of 70 grand of target and up. Okay, so I want you to be there. That's most important, and it's free, so no excuse. Let's keep moving forward. These are new incentives. By the way, my last slide here, and then I'm going to turn it over to Mike and Tim. Just real fast, what I want to focus on is SureBridge is no longer here. So Manhattan Life, Assurity, great supplemental products. Mutual of Omaha also has great supplemental products we'll talk about in a minute, but what I want to share is, look on the left-hand side, we have cash prizes starting at just $75, and then going to 100, and there's no minimums. These are easy, low-hanging fruit type policies. So extra cash, no limit on what they give out, and then Assurity, $100 first app, and then in the middle is Banner Life, number 1 term, $150 with your first app, no questions asked, except you can't write yourself or a family member. Let's move on to our official presentation of today, folks. We have one of my favorites, A+ rated, Mutual of Omaha. We have Michael, our RVP, joining us with Tim, his internal, and I'm going to turn the wheel over to Mike as we speak. Are you there, buddy?
I am here. Thank you, Bill. Appreciate the
opportunity
to talk to everybody today. So I don't know who's driving the presentation. I believe that would be Tim. So
yep, where I think we're switching over right now.
Okay.
Yep, working on it.
So for everyone out there, we have an outstanding relationship with Bill, Carey, and all the team over at Levinson Associates, and they do a terrific job. They have 100% of our attention, and we try to make them as happy as we can, and we do that by helping them make you as happy as you can be and satisfied with your business. So I'll hurry up and delve into our presentation for you. As Bill mentioned, Mutual of Omaha has a wide variety of product offerings. For this purpose today, we're going to focus a little bit on what we're really focused on in our fully underwritten product suite, and that is our IUL products. And we have done a terrific job with our IULs. They are simple, low-cost policy designs. Mutual of Omaha has one of the lowest cost products out there. And again, higher costs mean lower flowers. So with us, we're very strong that way. Something to really keep in mind is we use a portfolio money approach when we are crediting rates as opposed to new money rates. One of the nice things about that is those people who have current policies with us are getting the same rates and caps as our new customers are. So it's very rare in the insurance industry, but it gives us a great deal of cap integrity. We want to do what we do so that we have a consistent performance, so you're not apologizing to policyholders. We publish our cap rate history on our website at discoveriul.com, so you can go out there and take a look at that. We have not modified our participation rates or caps since November of 2020, so we're very consistent with that. The other thing to keep in mind is, and this is, I think, is important because this is a little bit unique to us, I think, but never in the history has Mutual of Omaha increased cost of insurance on life policies. We're a mutual company. We're not worried about Wall Street analysis. Our intent is to serve our policy owners as they own us, they own the company. I won't go over all of these with you, but we have some very nice business recognition and accolades from various third parties out there. We do a terrific job with our products. So I encourage you to really take a hard look at us. We have a protection-based product as well as an income-based product. So on our both of these are designed with very low cost. There's been a number of movements in the industry with regulation wise with AG 49s. We've never had to make a change to our product. So we have a death benefit guarantee to age 90 on the protection IUL. And that includes on both of the protection and the income advantage, we have a guaranteed refund option rider. This is for those who were 60 or younger when they purchase it, but they can take 100% of the return of their premiums if it's underperforming or for any other reason in years 20 through 25. Now, what I would tell you on that is it's more than just a protection of an underperformance. This can be used as a strategy. We price at $1 million bands. So if somebody has a $2 million need now, they can buy off of one application 2 policies at $1 million. And if things change in years 20 and they don't need the full amount, they can surrender one, or they can stop payments, have a guaranteed paid up policy. There's a lot of things that can be done with that. We'll get into that a little bit more. We also have a fully underwritten long-term care rider, and this would be a reimbursement type of a rider. And also on all of our policies, we have this chronic illness rider. It's included in every one of our policies unless somebody takes the long-term care rider. But this rider is for somebody to access 80% of their value of their face amount up to $1 million in the event they can't perform 2 activities of daily living. This is a rider that is included on all the policies. We do not underwrite for this particular rider. We do not have a table rating limit. We do not have an age limit on this. Some other carriers have a similar type of a rider, but they will limit that to a table 4 or to age 75. We have none of those restrictions. Okay, so let's dive a little bit deeper into that guaranteed refund option rider. And again, like we said, this gives them some extra protection in case things aren't performing. And when they use this, like I said before, if you look at that accelerated death benefit and chronic illness term rider that we have on there, if somebody has, let's say again, 2 policies, both at $1 million, this helps them because if they had one policy that was $2 million of death benefit and they couldn't perform 2 activities of daily living, then what would happen if they had one policy, they could access only up to $1 million of that $2 million face. If off that same application, they decided to take 2 $1 million policies, they in effect have 2 policies and they have access to 80% up to $1 million on both of those policies. So it's something to think about. The LTC rider also plays a part in that because if somebody splits a case, they can buy one with a fully underwritten long-term care rider and one with just the ABR rider. So that's another way to look at it and save some cost. So if we look at this long-term care rider, it's available on both of the products. We get that more on the protection advantage. It's just a better product for that. This long-term care rider is fully underwritten. It's everywhere except California. We are working to try to get that approved there, but that's been a long journey. And like I said before, it's a reimbursement rider, and we're going to be paid on the actual expenses. So obviously, this allows somebody an opportunity to access, all of the life insurance death benefit or a portion of it. And here's something that is important. If you apply for this rider and it gets declined, the ABR riders automatically put back on that policy. So again, like I had mentioned, this is fully underwritten. It's an upfront cost. There's no discount on the back end. And the way that this is priced, if somebody is buying $1 million to a $1.2 million face amount, the 4% benefit payment costs the same as a 2% benefit payment. So if you're in that arena, check the 4% benefit payment. The other thing that's important, because everybody knows this in long-term care, people are getting their notices of price increases and things of that nature. The cost of insurance on this rider is guaranteed not to increase. Once somebody is receiving the long-term care rider benefits, the rider charges are waived, but the life insurance policy for the other, that charge will still continue. So again, they can access all or a portion of the death benefit for long-term care expenses. Any unused long-term care benefits will be passed on to the beneficiary tax-free. I encourage you to take a look at this site. It's www.mutualofomaha.com/LTC-rider. That is a nice site just to go in and explore how the riders work. It's a great information piece on long-term care in itself as well. And one thing to keep in mind with our rider, Mutual of Omaha is still one of the very few companies that still offer a standalone long-term care policy. We've been doing that for a long, long time, and this rider mimics our fully underwritten standalone policy as far as benefits go. So it's a very, very solid rider. Again, when we look at our simple design, we use the S&P 500, do an annual point-to-point crediting method. We have 3 index crediting strategies on there. And again, like I had mentioned, we haven't changed these rates or caps since November of 2020. You can see the income advantage has a bit higher of the caps on them because there's no protection base of that policy or guarantee. But we do a terrific job with that. And like I said before, these are published and we show them to everybody. One thing I can tell you, we also have an underwriting program. It's called the FIT program. And what this does is this gives credit for people who come in at table 4. So we can take credits and go from a table 4 to a table 2 or a table 2 to a standard. This is something that our reinsurers love. It's a credit program. It's not a table shake program. We've been doing it for years. Roughly about 85% of the policies we issue, these folks are getting FIT credits. Go ahead and forward that over. One of the things I will mention before we talk about this, on that FIT program, these are credits that people get for social, health benefits and things of that nature. This isn't anything that you have to take on an application or list. It's everything that we can find in the underwriting portion of this on the records that we get. Go ahead, Tim. We also have an accelerated underwriting program. This is for our fully underwritten term in both of our IULs, up to $2 million for people who are 18 to 60. There's no random kickouts. You have to use a speedy drop ticket through iPipeline. We usually do a really good job with those. If something comes out that we can't accelerate it, we'll take it to fully underwritten traditionally, and you will be notified, and Levinson's will be notified, so you know that that's not going to be accelerated. We also have a fluidless underwriting program. This is going to be for larger cases. We designed this a lot for people who are like executives and things of that nature. These people be between 30 and 65. They have to be a U.S. citizen or have a green or valid green card. So any applicants who have a complete annual or an executive physical in the U.S. or U.S. territory, if they do that within 18 months, they can get this done for face amounts from $2 million and $1 up to $5 million. If it's within 12 months, the face amounts jump from $5 million to $10 million. This applies again to term life, all our accumulation products in our IUL. One of the things that we tell everybody is stress testing. There's a lot of people out there who are, you run an illustration, and an illustration is simply that. It's here's what could happen. We encourage everybody out there, when you are doing a comparison on your IULs, regardless of what carrier you're using, is when you put in the rate that you can illustrate at, everything's always going to look good. But the important thing to do is to stress test it and run this at lower rates so you can see what happens when it's not a best case scenario. So in this example, we have a 45-year-old male, preferred non-tobacco, putting in $25,000 for 15 years. We're using an increasing death benefit for 15, and then we're doing index loans beginning in year 21 for 15 years. So as you can see on this graph, everybody who puts in and gets the maximum, over 5%, income's looking good and everything's looking great. But if you go down and see 5%, 4%, 3, 2, and all the way down to 0, the blue line is Mutual of Omaha. This is something that shows you what are the expenses in those policies and how are they going to affect the performance of what you are looking to do for your customers. So it's very, very important to take a look at scenarios when they're not getting what's illustrated. This also is a example that we're showing for the guarantee product to age 90. And again, on this one, this is a 65-year-old male, preferred non-tobacco, and we're solving for the premium to carry to 120. So as you can see on here with the various different interest rates, anywhere from 0 to 5%, Mutual of Omaha does an excellent job of carrying out well past our guaranteed age 90. So one thing I would tip, just the big takeaway from what I want everyone to understand, if you are in that IUL market space, it is critical that you run some illustrations showing worst case scenarios and just showing how the product will perform when the market is not. And thank you for whatever business you send us. I'm going to turn this over to Tim. Tim is our internal person. He's going to talk about our simplified products.
All right. So here at Mutual of Omaha, we have a wide variety of simplified issue products. So what simplified issue means is it's going to be no labs or exams are required. Basically, underwriting is going to be off of application and MIB and pharmaceutical checks. So just to kind of step through, our hot product right now is our Index Universal Life Express. This is a simplified issue IUL, issue ages 18 to 75. Up to $300,000 face amount. So as you can see by this slide here is, as the client gets older, the face amount kind of steps down a little bit. So from 18 to 50, you can get up to $300,000. 51 to 60, it's 250,000, and then 61 and older is 150. Risk classes are only standard non-tobacco and standard tobacco, and we use the same index strategies as our fully underwritten products. Riders included with the policy are living benefits riders, so for terminal, chronic, and critical illness. That's a big one to point out, is with the fully underwritten only have the terminal and chronic, whereas the IUL Express has a critical illness as well. We have a waiver of surrender charge for partial withdrawals, a guaranteed insurability rider, and a lapse guard. And if they're taking out loans, we have a rider in there just to kind of protect you from taking too much out. And then you can add an accidental death benefit rider, a disability continuation of plan premium, disability waiver of policy charges, or a child rider. So kind of how this works is, so you can, there's two ways to quote this product. We have our app that you can download on your phone in your app store. Just type in Mutual of Omaha and it'll pull up. Or you can run an illustration on WinFlex. If you're doing an e-application, we have what is called Easy Solve. So what that is it'll run an illustration to guarantee for 20 years with $1 at 120. So if you use an e-application and you do an Easy Solve, You can click that when you're using an Easy Solve option when you're doing the e-application. That will attach the illustration to the application process and get that illustration signed for you with the application. If you are running, now you can run in WinFlex, you can run a minimum face max fund solve or short pays and all that. But if you do a situation like that, you will have to get the illustration signed by yourself and send that in to us. And then basically you complete and submit the application. We have automated underwriting on this, so the process is quick and seamless. We'll get into that a little bit more later. Then we have our Term Life Express. So this is, again, 18 to 75. We have a 10, 15, 20, and 30 year. And as you can see, the face amounts step down the same as the IUL Express. This also has the living benefits rider. We have an accelerated death benefit for terminal illness in California only. So California doesn't have the chronic and critical. We have a no-cost rider for residential damage, so we'll waive premium for a bit of time. And then we have the waiver of premium for unemployment and a common carrier death benefit provision. So if the client were to pass away in a, say, taxi cab or bus or plane, something along those lines, there's an additional death benefit that will pay out. Then we have our cost riders, again, the disability riders and accidental death and your dependent child rider. And then our living promise. This is our final expense plan. So we have two that we try to start everybody down the level benefit plan. So ages 45 to 85 up to 50,000. But we also have a graded plan that if they don't qualify for the level. So that's ages 45 to 80 up to $20,000. So what that graded means is if the client were to pass away within the first 2 policy years due to natural causes, they'd get 110% of their premiums back. After that 2 years, it's full death benefit. We do have a cost rider you can add to this for accidental death, but we do have no cost rider on this for accelerated death benefit for terminal illness or nursing home confinement. So you can access some of that death benefit. So like I mentioned, the underwriting is done mostly off of the application. So part one, yes answers in part one of the application are going to be a decline. So these are the knockout questions. But answer no to all these questions, move on to part two. Yes to any questions in part two is going to be the graded. So just to kind of quick break down all that. So you can get level benefit for no to all application questions. It'd be graded for yes to any questions in part two and decline to any questions in part one. And then we also do an MIB pharmaceutical check and that phone interview as needed. That means, say something, all the questions are answered no, but something comes back in the MIB and pharmaceutical check, we may call the client just to kind of work out that discrepancy. Then we have our children's whole life product, issue ages 14 days to 17 years, up to $50,000. There's only 2 health questions on this. Now, a great thing about this product is a grandparent can sign the application without parent signature. So if you're doing a final expense cell, hey grandparent, do you have any grandkids that you want to cover? This is a great product to go to. Good add-on product. And then we have, it does build a little bit of cash value, coverage guarantees to age 100, but we have a couple great riders on this. So we have a guaranteed insurability rider and a death of policy owner waiver of premium. We'll get into that a little bit here. So say sometime along the line that child, becomes an adult and they're no longer insurable. They have, for some reason, something happens, they're not insurable. We offer opportunity up to 5 times. So if they have a $50,000 policy, they have 5 times they can get $50,000 of additional coverage. So if they were to get married, purchase a home, have a child or adopt a child, or we offer the 25th, 30th, 35th, and 40th and birthdays of the client. So they can get additional whole life coverage for additional, so to further protect themselves. And then the waiver of premium due to death of owner. So, grandparent's going to outlive the grandchild. So if if the grandparent dies, we for a 90-day period will waive the policy charges basically. So doesn't affect the death benefit or anything like that. It just gives them a little bit of time to set up a new owner and move on with the policy. A little bit on the underwriting. So we prefer the e-application for these products because we have automated underwriting. So what that does is that gets us the application in good order. We have an instant underwriting decision all day, every day. So if you only can meet with the client at 10 o'clock at night on a Saturday, if you've got your desktop or laptop and a Wi-Fi connection, you can take that application and still get your underwriting decision. So kind of how the process worked prior, to some of these enhancements that I'm going to talk about is you would, meet with that client, you get their information and the product information, and then there's a hard stop to get the HIPAA authorization signed. So we have to get that HIPAA authorization signed up front so we can do our MIB and pharmaceutical checks. So previously we only had an email option, which is kind of clunky, takes a little bit longer for that, the client to get to their email and do a bunch of, do a login and a bunch of clicks. What we added just recently is a text signature. This process will, if you use a text signature process, it's going to greatly increase the time or decrease the time that you spend on the application. Once you stop at that HIPAA authorization signature, just tell the client, I'm going to send you a text to sign the HIPAA authorization. I've tested this out myself. It's 2 clicks once you get that text and you're moving on. And then we added a pre-approval process inside the application. So not only are you getting automated underwriting, you're getting a pre-approval process. So a little bit how that works is you take that producer, you put your producer information in, the proposed insurance information, and the product you're applying for. There's that hard stop for the HIPAA signature. Use that text signature, you're getting it signed right there, right away. What 2 things are going to happen? We're going to run our MIB and med data checks. You're going to enter a little bit more proposed insurance information, your insurance history and plan information, like face amounts and stuff like that. And there's going to be a little bit of a stop for the pre-approval. You're going to see on the screen a favorable or not favorable. Now, if you get favorable, you can lock data and continue the application. Not favorable, so I'm not telling you that it's going to be an automatic decline, but chances are this policy is going to be a decline. And these products, these simplified issue products, are heavily reliant on placement and persistency. So we want to get as many cases in-house that are favorable, and we can move on. You get that not favorable. So I saw a study we did on this of 2,500 apps that were sent over to us that got the not favorable designation. Of those 2,500, only 4 of them got pushed through and were able to issue coverage. So you're probably going to be a decline. So what we built into this pre-approval process is a do not continue application. So if you get a not favorable, click that do not continue application. The app doesn't get sent over to us for additional underwriting. It doesn't get reported to MIB, so there's no hit to the client. There's no placement and persistency issues for the agent. It's just move on, try to find something else for the client. So you get a favorable. What goes from there? You go and do the underwriting information. You're going to be your application questions, beneficiary. You do your premium and banking information. If you do Easy Solve, you get that email, the illustration signed along with the application, and you hit submit. You get the text signature with the client for final submission. Hit submit, and you're going to get a decision right there on the spot. We are working on auto issue right now. Currently, we don't have that. So right now, the kind of the delay in these products as it goes to our underwriters, and they have to issue the policy basically. But they're already coming in approved, so we can just get it done right away. So we do have some a site out there. So our simplified issue backslash Reach of Omaha backslash simplified issue. So it's a site you can go to see the different signature methods. There's lots of training materials out there. There's marketing material you can use. It's just a great site to go to for additional information. That's all I have on our simplified issue products.
Okay.
You can move on to questions.
Yep, I think, Tim, we're going to, just because of the time, we're going to do all questions offline, and we'll call everyone back as soon as we hang up. Do you and Mike have anything else before we put a bow on this?
Sure. I just want to comment that, we appreciate all the business that we receive from all of you through Levinson. And like I said, they are a terrific IMO. You guys are partnering with the right team there. They certainly have all of our attention at Mutual of Omaha. So you can rest assured anything that you write with us through them is going to be taken care of, and we will pay high attention to it. So I just wanted to reiterate that, because I think oftentimes, people don't realize the importance of the IMO, and Levinson Associates is outstanding. So I don't say that about every IMO I work with, but I do say that about Levinson Associates.
Great partners.
Oh, thank you guys. I really appreciate that. That really, it means the world to us. So thank you for that. We don't take it lightly. And okay, so good stuff. I have a couple other things I want to touch on, and then we'll have our giveaway here. Tim and Mike, thank you once again. And also, just to let everyone know, we have a complete marketing section just dedicated to Mutual of Omaha on our website. And then you're probably scratching your head saying, either A, hey, I want to get appointed. This is almost too good to be true. Where do I start? Okay, we're going to show you that in a second. And if you already have a contract, maybe you're under someone else, one of those other types of agencies I spoke about in the beginning, and you want to move your appointment, you got to get a release, obviously, or wait out the waiting time if you've written recently. But everything that you need to know is on the slide in front of you and on our website, how to get started. I saw a few questions come in earlier. How much does it cost to join Levinson? There's no cost. It's free. Okay. And there's no, like I said, there's no contract. We don't handcuff you. The only thing that you would pay for is, like, let's say if your resident state is Florida and you want to be set up in 17 other states, you obviously have to take care of your non-resident appointment. But other than that, no charge. And here's what's interesting. Mutual of Omaha was one of the first scholarship companies through SAFE scholarship program. So think about when Mike and Tim were talking about, the final expense and the children's whole life and, their great door openers and the instant decision. Now you're telling the client or the grandparent or the mom, hey, listen, not only is the children's whole life, $11 a month, for this permanent product, but you're also getting a 1-year free scholarship for little Timmy, okay, who's now 2 or 3, okay, and this pays for 1 year of tuition, 25% off each year, which is a year, okay, and we have over 430 schools, colleges in the program, okay, so that's another value add, and you could go back to all of your past MOO policies that you sold and say, hey, Bobby, Shirley, great news. Since I'm a SAGE approved agent, I can award you the scholarship program at no charge. Okay. And they're going to say, no way. What does it cost me? You're going to say nothing. It's free. Okay. But then here's what you do. By the way, Bobby, Shirley, do you have any referrals for me? You're so happy with my service, right? You, the agent, you're like Superman or Superwoman. And you just say, well, by the way, leave a review, right, on my Google reviews page. And if you have a referral or two or family member that I could speak to that also could benefit from my services, can you give me a name and number? Boom, the rest is history. So you got to be scrappy. You got to think and operate like this, especially moving into the new year. Let's keep moving forward. I want to talk about the top non-med carriers and options in 2025. This is a big deal. We're seeing insurance technology, especially on the underwriting side, changing so rapidly, especially since COVID, right? Back in 2020, 2021. So now Mutual of Omaha up to 10 million. Okay. I mean, that's huge. Number one within itself, right? Legal in General, Banner Life, the number one most competitive term product in the industry, bar none, instant decision, up to 4 million. Okay. We are the only IMO that has this product, okay, which is the traditional vanilla term product, okay, on Insure Me Now Direct, 100% direct to consumer. That's huge. It's free. Okay. That's also free, by the way, 4 million. Pac Life, just under that, up to 3 million. LSW is up to 3. Okay. These are other options for term, permanent, living benefit products, basically all the above. Okay. So if your client is standard or better, these are great options for you to consider, especially so you don't get caught in that 8-week underwriting wheel, which nobody wants to be part of. All right, let's keep moving forward. So speaking of the complimentary exclusive Insure Me Now Direct, now up to 4 million, we are adding the Lloyd's of London products next. So you're going to have, I mean, put it this way. Right now, we have 2 quoting engines built into the platform. This is direct to consumer, or you could walk your client through this on a Zoom call, a GoToWebinar like this, or on your cell phone or on a tablet. You know, it doesn't matter. Okay. Or they can do it at 4 a.m. when you're in bed. Okay. So it doesn't make a difference. But here's what's so cool. You have the instant decision quoter, okay, which has over 25 products. Now on the left side, you have the traditional underwriting quoter. Okay. So on that side, you're getting all of the top insurance carriers and quotes. And then if the client says, wow, this quote with Protective Life looks great, I want to apply. Okay. We have a e-app form that pops up, and it's your consumer's going to put in some basic information. It's real-time lead capture. So that form is then sent to you, the agent, even if it's 4 a.m. You'll wake up at 7 a.m. You have an email, right, with all of the client's information. You put that into a drop ticket. Boom. You just sold a new policy while you were sleeping. Okay. So now remember, you have the instant side, which happens 1, 2, 3, and then the traditional side. Okay. All on Insure Me Now Direct, your picture, your phone number, your logo, and then we have all the marketing built around it. And here's what's so cool. And I want to make sure we're okay on time. Remember, I said this a couple times. The 2 biggest strategies that IMOs and agencies are leaning towards for the new year, where they think the biggest premium increase is going to come from, the 2 big ones, it was P&C, okay, and then financial planning, wealth strategies, okay? So think about this. P&C agencies, right? We have right now Estrella Insurance, one of the largest P&C companies in the country, okay, especially in Florida. They're plugging into this platform, okay, so they have their own version. And now their agents can say, hey, to their P&C clients, oh, Bobby, Shirley, did you ever consider life insurance, final expense, DI, CI? They can run a quote right from their site, apply right from their site. Boom, the rest is history. We have all the marketing that's going to help you drive traffic back to your site. So you can team up with a P&C agency, health agency, whatever. It could be a mortgage company, realtors. Okay, for mortgage protection insurance. I mean, the list goes on and on and on. And this is all free for you and for them. So again, it's a no-brainer, no commission reduction either. So no gray area, no small print. All right, you get my point. Let's move to the next slide. So Mutual of Omaha, right? And you heard Mike and Tim talk about iPipeline a few times. We are a official pilot IMO for iPipeline. That means we get all the new stuff, the latest and greatest. So iSolve, this is a permanent quoting engine, okay? Think of IUL. Look at the top carrier, Mutual of Omaha. What does this mean to you, the agent, in the field? Okay, check this out. Just like you're running a regular term quote, okay, like 10 years ago on our website. So you put in the client's information. The only difference is now you're going to see the permanent options on the bottom. The system is going to take all of the basic info you just put in on that specific client, Okay, it's going to show you an illustration. And then if you hit apply, this is with the client, okay, then all of that info is populated into the e-app. You fill out any missing columns or blank areas. You hit next. You are done. You just went from basic info to quote to e-application to approval in less than 15 minutes using the iSolve quoting engine, free on our website. Let's keep moving forward. The Sage Scholarship Platform, again, complimentary. Those are the carriers on the right-hand side. You're going to see Mutual of Omaha, which is another big one, top front center. Here's what's so cool. This is a typical policy, okay? This is what we're looking at in front of us on that chart. If you go to the bottom after 19 years, that's 49,500 points. Each point is $1 of tuition, okay? Remember the 1-year tuition I was talking about earlier? Okay, well, now you know. By the way, any of those companies, as long as you're a Levinson active agent with those carriers, again, you can also go back to the prior policies that you sold a year ago, 17 years ago, 4 years ago. Great news, Sally, Bobby, guess what? Now that I'm a Sage approved agent, you get the free scholarship. What is it going to cost me? Nothing. 3 referrals, right? You get it. Let's keep moving. Social media posts, okay? I wanted to talk about what's hot, what's new, what's working for other agents like you in the field, okay? So, by the way, you can go on Facebook or Instagram and just put in Index UL, critical illness, disability income, right? And look at top performing posts. You can typically do recent or top performing. I do top performing. Here's what's so cool, right? You don't have to reinvent the wheel, change a few spokes. I know I say it every time, but I can't encourage you enough because most of you are not doing this. Some of you are, most of you are not. So I want to give you some basic examples, okay? Let's go to the top left side. Critical illness can affect anyone at any time. It's just shedding light to this concept because most people don't know what it is. Remember, they're not in your world, right? So we get it. They don't. So you have to kind of explain it. Cartoon character here on the bottom, on the left side, 21 likes, okay, with what is it? A guy lifting weights, a fitness guy, and it says, what is CI? How do I choose one? Okay, it's a no-brainer. Let's move over to the right. Insurance 101, CI. That just gives a little paragraph about what is critical illness insurance, heart attack, cancer, stroke, protection. 110 likes, 17 comments. Every comment's a lead, right? Because you reach out through direct message to say, Jenny, I saw you had a comment question about CI. How can I help you? When can you talk? Boom, new free lead. Right-hand side, long-term care insurance typically covers at these causes, right? These are the triggers. Boom, that created one comment, free lead, 76 likes, almost 1,000 views, okay? Not rocket science, folks. Let's keep moving forward. The next slide is our newsletter. By the way, we're going to get everyone out in 1 minute here, and I'll have my question of the day, I promise you. Okay, you should be getting this in your inbox every other week. This is just everything you need to know in one spot, okay? Very easy, simple to understand. If you're not getting them, check your spam folder. If you're still not getting them, you got to call in and give us your correct email address. Let's keep moving. It's my second to last slide. We'll ask my question and then we're done. This is our future training events, everything that is coming up in February and March. And then, of course, the big expo, April 11th. This will be in our thank you email that's sent tonight. And then our final slide here in our giveaway. Actually, I'm not too late. Actually, I'm right on time. Okay, good news. My Positive Tuesday quote, all the knowledge and motivation in the world is completely useless without action. Okay? Common sense. Hello, take the first step. You should be on Instagram, on Facebook, on LinkedIn, okay, using our infographics, our blasts, our flyers. We have everything for you already built. We can even brand it for you for free. There's no more excuses. Even if you get 1 like, it's 1 more than you had yesterday. Okay, enough of my ranting. My question of the day. Let's get your little fingers on the keyboard. You got to be quick and you got to be correct. So I'm going to ask the question. You answer first and correct. JC is going to announce your name. You walk away the big winner for today. We got a HD high definition tablet, Fire tablet, and 2 prospecting books. Question is, what are the two Levinson carriers I mentioned that have the highest non-med limit. Okay? I mentioned a few carriers, but tell me the first and second carrier I mentioned that have the highest non-med limit. There were two carrier names. You tell me the companies, you win. JC is going to tell us who was first and who was correct. JC?
The winner is Ashley C.
Ashley C. The answer was Mutual of Omaha at 10 million and Banner Life at 4 million. So Ashley C., congrats to all of you. Because if you go on our Facebook page, number one, don't forget about the Super Bowl contest. Number two, leave a review on our Google's reviews page or our Levinson Facebook page, and I send you the same prospecting book. So you're a winner too. Okay, everyone's a winner. Let's have a great rest of your Thursday, great rest of the week. Let's have a great time. Sunday night should be a great game. Great selling. We'll see you next Thursday. Thanks again.